Welcome back to Motivational Wealth.
Yeah.
I was thinking about our deep dive today, and it really got me thinking about wealth in a deeper sense.
Oh, how so?
Well, we're going to be talking about Louis Borsellino, a legend in Chicago's trading pits. High stakes, big money, all that. But true wealth, lasting wealth, it's got to be more than that, right?
Absolutely. It's about more than just the numbers in your bank account.
Exactly. And I think, the ultimate wealth is the gift of salvation we have through Jesus. That spiritual abundance, eternal life, that's wealth that can't be measured.
Couldn't agree more. And I think exploring Borsellino's story, his successes, his setbacks, it gives us a unique perspective on ambition, risk, and, what really matters in the grand scheme of things.
I'm with you on that. So today we're going to be digging into this YouTube interview with Borsellino from the Words of Wisdom channel. The title is, well, pretty straightforward, Louis Borsellino, the biggest S&P 500 trader in the world.
Quite a title, and the interview itself is packed with insights.
So let's jump in. Borsellino's story starts, kind of unexpectedly, with a law degree in mind.
Yeah, right out of college, he had plans for law school. But then, just 2 days after graduation, tragedy struck. His father was murdered. It completely turned his world upside down.
Wow, I can only imagine. So law school was off the table.
At least temporarily. He took over his father's trucking business, responsibility, family, all that. But he was still studying for the LSATs, keeping that law dream alive.
Okay, so how did he go from trucking in the LSATs to the trading floor in Chicago? Seems like a pretty big leap.
It all started, believe it or not, with an article in the Wall Street Journal.
The Wall Street Journal. Interesting.
Yeah, he read this piece about the increasing activity in gold futures, piqued his interest, and around the same time he was playing handball with a guy named Lou Matt.
Okay, handball, gold futures. I'm starting to see a connection here.
Well, as luck would have it, Lou Matt had a trading firm right there on the floor of the Chicago Mercantile Exchange, the CME. Borsellino mentioned his interest in gold futures, and Matt was like, hey, you got to see this place. Come on down.
So what was it like? I mean, the floor of the exchange, that's got to be intense.
Oh, absolutely.
Yeah.
Borsellino describes it as this overwhelming experience, the energy, the noise, the constant shouting. He called it the sound of money in the air.
Wow, that's a great way to put it.
Yeah.
And he was hooked.
Instantly. Took a job as a runner that very day, no hesitation.
So he basically walked into the CME and never looked back. Now, it sounds like he got into the trading world at a really interesting time. Chicago was the place to be.
Oh, for sure. In the 80s, Chicago Futures was, as he put it, the king of the world. The Chicago Board of Trade, the CME, they were the major players, especially as financial futures trading took off.
So New York wasn't the center of the trading universe at that point.
Not for futures, no. And the other thing Borsellino points out is that the commodity trading world was actually pretty small back then, maybe around 40,000 participants.
Compared to how many in the stock market?
He estimates about 450,000 in the U.S. stock market, so yeah, much smaller. It was this young, rapidly growing industry, lots of opportunity.
And he was right there in the middle of it. So he starts as a runner. Tell me, what does a runner actually do on the trading floor?
So back then, everything was done on paper. So when a client called in an order to their broker, the broker would write it down on a slip of paper. The runner's job was to take that order and physically run it to the correct trading pit on the floor.
Okay, so literally running around with orders, that makes sense. And what about the trading pits?
They were these octagonal-shaped areas, each dedicated to a specific commodity, like pork bellies, live cattle, gold, currencies, you name it. The runner had to know which pit to go to for each order.
That sounds like a recipe for chaos. So many runners, so many orders, so much yelling.
Oh, it was definitely organized chaos. But yeah, there was always the potential for errors. Wrong order, wrong pit, things like that.
And Borsellino didn't stay a runner for long, did he?
No, he got a lucky break. While he was in the gold pit one day, he ran into Maury Kravitz, a family friend, and, get this, a leading expert on gold trading.
Small world.
Right. And Kravitz, after just 2 weeks of seeing Borsellino work, he offers him a job as his clerk.
Wow, talk about right place, right time. So what does a clerk do?
A clerk's job was to manage the orders for the broker. He'd have this deck of orders, buy and sell orders for a particular contract, all organized by price. Market orders, stop orders, all that.
So kind of like the broker's right-hand man.
Exactly. As the market moved, the broker would tell the clerk which orders to execute based on those preset prices.
Sounds like a lot of responsibility and a lot of pressure.
Oh, for sure. And, Borsellino talks about how this paper-based system, it was ripe for errors.
Oh, yeah, I can imagine. Give me an example.
Well, it could start with a phone clerk at the brokerage taking down the client's order wrong. Then maybe the runner takes it to the wrong pit, or even in the right pit, the clerk could mess up the order deck, the broker could execute the wrong order, all in this crazy, noisy environment.
Yikes. So much potential for things to go wrong.
And they did sometimes. They called them out trades, where the buyers and sellers' records didn't match, and they'd have to spend hours reconciling everything.
So organized chaos with the side of potential disaster sounds like a lot of fun. But Borsellino, he thrived in that environment, didn't he?
He did. He talks about how there was this underlying organization to the chaos, a set of rules, customs, a way of doing things. And he says there were really two main types of traders on the floor.
Well, I'm curious, what were they?
You had the order execution guys. They were working for brokerages, earning commissions for filling client orders. And then you had the proprietary traders. They were trading their own capital, taking on more risk.
So more like entrepreneurs, betting on their own insights.
Exactly. And when Borsellino built his own trading operation, he specifically looked for people with discipline, like college athletes. He said they had the right mindset.
Makes sense.
Yeah.
You need that focus and mental toughness to handle the pressure.
Yeah.
And speaking of pressure, risk management must have been huge in that world.
Oh, absolutely. Borsellino's a big believer in trading with a stop-loss order, a predetermined price where you automatically exit a losing trade, limits your downside.
So basically cutting your losses before they get out of control.
Right. And he stresses sticking to your plan, not letting emotions dictate your trades, and learning from your mistakes. Every losing trade is a chance to get better.
I like that, turning setbacks into learning experiences. But it can't be easy to stay disciplined when you're losing money, can it?
He talks about the mental game, that paralysis you can feel after a string of losses. It can really cloud your judgment.
So how did he stay on top of things? Did he have a team, people helping him analyze the market?
Oh, yeah. He built a whole operation. He had analysts, each one specializing in a different type of technical analysis.
Technical analysis. What's that in a nutshell?
It's basically studying past market data, price, volume, all that, to try to predict future price movements, like reading the market's behavior, looking for patterns.
Fascinating. So he had all these analysts, each with their own approach, feeding him information.
Exactly. Some were into Gann theory, some looked for reversal patterns, all kinds of different methods.
So he was getting all these different perspectives. What did he do with that information?
The goal was to find areas of consensus where multiple analysts were pointing in the same direction.
So kind of like a wisdom of the crowds approach, but with market experts. Interesting.
And, you know, he wasn't afraid to make tough decisions. If a trader on his team wasn't consistently profitable, he'd let them go. It was all about performance.
Results matter. Now, the trading world has changed a lot since Borsellino's time. Everything's electronic now.
True, but he saw it coming. Back in the late 90s, he was already talking about the shift to electronic trading, the decline of floor trading.
He was ahead of the curve.
He was. He even predicted the merger of the CME and the Chicago Board of Trade, which happened eventually.
So he wasn't just a great trader. He understood the bigger picture, how the game was changing. But let's go back to his time on the floor. He tells a pretty amazing story about a pivotal trade he made early in his career.
Oh, yeah, the one during the Falkland Islands conflict? That was a wild time.
Tell me about it.
So he was a clerk at this point, not making much money trading on his own, actually thinking about leaving the business.
Really? I can't imagine him doing anything else.
Well, then the Falkland Islands conflict happens in 1982, and the gold market goes haywire. And he makes this sell-out trade, basically a mistake in the execution, but it works out hugely in his favor.
A mistake that turned into a win? That's incredible.
Yeah, he made like $75,000 on that trade. And he says that was the turning point, gave him the confidence and the capital to move into the S&P 500 pit, which was much more competitive.
So, a lucky break that propelled him forward. From there, he really started making a name for himself, right?
Oh, yeah, he was handling huge orders for major firms, Goldman Sachs, Merrill Lynch, you name it. At one point, he was supposedly handling something like 10% of the entire S&P 500 volume.
Wow, 10%, that's massive. But then came the crash of '87, October 1987, a day that went down in history.
And Borsellino was right in the middle of it. He actually left for Europe just before the crash. He was short 20 S&P contracts at the time.
Short 20 contracts, so he was betting the market would go down.
Right. And then, while he's in Switzerland, he gets the news. The Dow drops 500 points in one day, unheard of at the time.
So what did he do?
He immediately booked a flight back, on the Concorde no less. He had to get back to the trading floor.
So he flies back, walks onto the trading floor. What happens next?
Well, first thing he notices, his Eurodollar call options, which were basically worthless before he left, they're now in the money. big time.
Because of the crash.
Exactly. The market was in turmoil. And the next day, Tuesday, the S&P pit was a ghost town. Way fewer traders than usual. Everyone was shell-shocked.
I bet. And then came Thursday.
Thursday morning, and the market opens 5,000 points lower, just an incredible drop. And Borsellino, he buys 300 S&P contracts long this time, betting the market would bounce back.
300 contracts. That's a huge bet.
It was, and the market started moving fast, hundreds of points in seconds. He was riding this wave, watching the numbers climb.
And how much did he make?
In about 13 seconds, he reportedly made $1.5 million.
$1.5 million in 13 seconds. I can't even wrap my head around that. It must have been exhilarating and terrifying at the same time.
He describes feeling physically ill. The pressure was that intense. One wrong move, and he could have lost everything. But he held his nerve, and the rest is history.
This one for the record books. So he saw the rise of electronic trading, made a fortune in the pits. What did he do next?
Well, he took his knowledge and his instincts and applied them to other businesses. He co-founded the first NASDAQ-used stock trading room in Chicago called SOES Bandits. They were exploiting these tiny price differences in over-the-counter stocks.
Sounds complicated.
It was, but it was profitable. And it led to this whole legal battle over electronic trading networks, which eventually became part of the NYSE. Borsellino's always been ahead of the curve.
So he went from trading gold and S&P futures to battling it out in the world of tech and finance. Quite a journey.
He also got involved in healthcare and cybersecurity, always looking for new opportunities. He's got that entrepreneurial spirit.
And through it all, he managed to stay grounded, keep his priorities straight.
He credits his family for that, keeping them focused. And he says he's always meeting people who are even more successful than him, which keeps him humble.
I love that. So what's the biggest takeaway from Borsellino's story? What can we learn from his experience?
I think it's the importance of having a process, being disciplined, and sticking to it. Whether you're trading or running a business or just trying to achieve a goal, those principles are universal.
And he's a great example of how to navigate risk and opportunity, how to adapt to a changing world. And, it makes me think about wealth in a different way. It's not just about the money. It's about the mindset, the resilience, the ability to learn and grow. Those are the qualities that build true, lasting wealth.
I couldn't agree more. It's about building a life of purpose and meaning, and that's something we can all strive for no matter what our financial goals are. And like you said at the beginning, the ultimate wealth is the gift of salvation through Jesus Christ. That's a wealth that transcends any market fluctuation.
Absolutely. Thanks for being with us today, and thanks to all of you for subscribing to Motivational Wealth. We appreciate your support. We hope this deep dive into Louis Borsellino's world has given you some food for thought, some motivation to build your own legacy of success, both financially and spiritually. And remember, true wealth is about more than just the numbers. It's about living a life of purpose, integrity, and generosity. Until next time, keep striving, keep learning, and keep building your motivational wealth.
We'll see you next time.